Yes, welcome, good people. We want to discuss the ATD Level 1, Introduction to Financial Accounting. And this is a paper that was done in April 2022. April 2022, Introduction to Financial Accounting, ATD Level 1. Specifically, we'll be looking at question 4, and question 4 is on, they just want the statement of profit or loss. So we will rewrite the trial balance and then come up with the statement of profit or loss. These are quite an easy exercise. Let's do it very fast. Weissman operates an electronic retail shop. Looks like it's a sole proprietorship business because they're just talking about, Weissman. It's not a limited company. It's not a partnership. So Weissman operates an electronic retail shop. Currently, he has not employed an accountant and therefore using his limited knowledge in accounting, he prepared his trial balance for the year ended that. That is the trial balance. You can see the trial balance. Additional information. Inventory as at that 1st March 2022 was valued at 16,250,000. Let me just confirm this figure. Figure 16,200,000. Yeah, it's the same mistake I think also in the paper. So we'll just have to assume the figure. We'll assume it's 16 to 50 and see if we're going to get the correct balance. That's how it's written in the paper. So let's just assume that for the sake of it. Included in the purchases is the purchase of equipment and office computers worth 120 million, that is. Depreciation is to be provided on cost as follows: equipment and office computer at 10%, motor vehicle 15%. Allowance for doubtful debts is to be increased to 800,000. The following expenses are outstanding. So these are outstanding expenses, the three of them: stationery, rent, and REX. And then the following expenses were prepaid: the sales promotion expense and the insurance expense. So what are we required to do? We are required to rewrite the trial balance in the correct way and come up with the statement of profit or loss for the year ended at 1st March 2022. This is 6 and 14 marks respectively. So they're asking us to rewrite the trial balance. Looks like it is not correct. Let's just see some of these entries. This is land. Land has been put on the credit side. Land is not supposed to be on the credit side. Land is an asset. So the basic rule is this, that assets are debit entries, liabilities are credit entries, expenses and losses are debit entries, and then incomes and gains are credit entries. Just that. So yours is just to identify if it's an asset or if it's a liability or if it's an expense, if it's a loss, if it's an income, if it's a gain, and you put whatever it applies. Normally this is the debit side and this is the credit side. So debit side, credit side. So just ask yourself, is it an asset? Is it an expense? Is it a loss to the business? Is it an income? Is it a gain? And you'll come up with your trial balance that is very much correct. So let's come up with our trial balance here. And trial balance also has the heading. So we'll just say Weissman Electronics Retail Shop. We'll have Weissman Electronic Retail Shop, and this is as at 31st March 2022. I'll come here and say Weissman Electronic Shop. Weissman Electronic Shop. Then say trial balance as at 31st March 2022. I think that's what the question is asking. I think it's as at 31st March 2022. Let's just confirm. Yeah, as at 31st March 2022. Then you underline the same. Underline this. It's good to underline. And then we'll have the debit side and the credit side. And it's also good to show the shillings. And if you are restricting the zeros, you can also show the restrictions. So credit and the debit side, and then you can have the shillings and the zeros restricted, shillings and the zeros restricted. And then of course this side we have now the particulars where we are going to be putting the details, and then we proceed. So you underline this. I hope my line is going to be good this time round, and I've just succeeded. So that's how our balance sheet will be. That's how it will be. So we have 3 columns. You can see the first column, second column, third column. I am just not putting the lines, but we have those columns. So then we start. Land 400,000. So the question is, we come here, we write land, and the amount is 400,000. Is land an asset or a liability? Land is an asset. So 400,000 on the asset side, just like that. Then we got the second one, sales. Sales is basically money. This is a stock that is leaving the organization. Stock that is leaving the organization. So we are losing stock. So it appears on the credit side. It appears on the credit side because these are stocks that are leaving the organization. Normally, when assets come in, we debit. When assets go out of the business, we credit. So sales 960,000, and it will appear on the credit side. Sales 960,000, and it will appear on the credit side like that. Then we move to the next one, purchases. Purchases, these are stocks that we are bringing in the organization, so they are assets. So purchases 720,000. You can see it's on the credit side. It's not supposed to be on the credit side. These are assets. There's an increase in asset. So 720,000 on the debit side. Purchases 720,000 on the debit side. 720,000 on the debit side, like that. Then the carriage inwards. Carriage inwards are the costs that are associated with the purchases. When we buy goods to the organization, there are some costs that are associated with transporting those goods from the supplier to our premises. That is what we call carriage inwards. It's basically a cost. So this will appear on the debit side. So carriage inwards 10,000 on the debit side. Carriage inwards 10,000 on the debit side. It's a cost, and we say the expenditures are, Then we have, and the other way, I've seen some people also arguing that purchases is, it's an expenditure. You spend money, so that's why you put on the debit side, and then sales money comes in, so that's why it's on the credit side. In comes credit. It depends how you're going to look at it. Okay, then drawings. Drawings is a loss to the business because the owners are taking some money from the business. So it's a loss to the business. The business is losing this money. Basically, it's capital. So drawings that 5,000 will appear on the debit side. Drawings that 5,000, so it will appear on the debit side. Drawings 35,000, so it appears on the debit side. Then rent expenses, of course, from the name it's an expense, so 15,000 on the debit side. Rent expenses 15,000 on the debit side. Rent expenses 15,000 on the debit side. Then we have rates. Rates is normally what we pay for land. So rates, this is an expense, 8,000, and it will appear on the debit side because it's an expense. Rates 8,000, so it will appear on the debit side because it's an expense. Then we have insurance. It's obviously an expense. Insurance is an expense. It will appear on the debit side. Insurance expense 800. So insurance is an expense 800. So these are what you pay to insure, to basically have your vehicle or something on the road. And it's not the main reason why you are doing business. It just comes in as a by the way. And expenses normally are things that just about, and our job is basically to defray them as they come up. So postage and internet, of course, this is not the main reason you started the business, so these are expenses. Postage and internet 450 on the debit side, it's an expense. Postage and internet 450 on the debit side, it's an expense. Then we have stationery. 1210, stationery is an expense. 1210, stationery is an expense. 1210, stationery is an expense. 1210, so it will appear on the debit side because it's an expense. Sales promotion expenses, just from the name, 400 on the debit side. Sales promotion expenses, 400 will be on the debit side. Sales promotion expenses, 400. I think I got the figure right. 400 on the debit side. Sales promotion expenses, 400. Yeah. Salaries and wages, 24,000. It's an expense. Salaries and wages, 24,000. It will appear on the debit side because it's an expense. Salaries and wages. It will appear on the debit side because it's an expense. So 24,000. Then bad debts written off. It's a loss to the business. It's a bad debt. We have accepted it as a bad debt. We were supposed to be paid by the debtors, but of course, for one reason or the other, we are sure they are not going to pay us. So bad debts written off, 600. It's a loss to the business, so we debit. Bad debts written off. Bad debts written off, 600. I think the figure was 600. Let me just confirm. Bad debts written off, yeah, 600. Allowance for doubtful debts, 720. Allowance for doubtful debts, 720. Allowance for doubtful debts, 720. Now this is we are just providing, it's a provision. It's a provision. So provisions are liabilities. We are setting aside some money not to spend. So this money we are just holding it in case we are not so sure. So this is a liability. Some money set aside just in case things happen the way we had anticipated. So allowance for doubtful debts. Allowance for doubtful debts, 720. Allowance for doubtful debts, 720. So, oh, sorry, this is supposed to be on the credit side, not on the debit side. So, credit side, 720. I hope there's nothing else I'll put on the debit side and we are supposed to put on the credit side. I don't worry about the frequency of the debits over credits. It happens. Just be guided by the facts. Accounts receivable. These are debtors. Accounts receivable are debtors. So debtors are assets. Debtors are assets. They are holding our money for the business. So they are assets. Accounts receivable, 12,800. So simply come here and say accounts receivable, 12,800. Accounts receivable, 12,800. Then move next. We have accounts payable, 6,800. Now these are the creditors. We are supposed to pay them. Accounts payable, 6,800. 6,800. So because they are creditors and they're supposed to pay them, they are liabilities to the business, so we credit. Cash in hand, 140. Cash in hand is an asset. Cash in hand is an asset. Cash in hand is an asset and the amount is 140. Next we have cash at bank. It's an asset. 25,070. Cash at bank, 25,070. It's an asset. Cash at bank, 25,070. It is an asset. 25,070. It's an asset. Next we have inventory, 14,350. This is opening inventory, but nevertheless any inventory is an asset. So inventory, 14,350. It's an asset. So assets are on the debit side. 14,350. Inventory, 14,350. It's an asset. Then next we have motor vehicles at cost, 280,000. Motor vehicles at cost. So motor vehicle is an asset, 280,000. So simply come here and say motor vehicle at cost, 280,000. Motor vehicle at cost, 280,000, like that. Good. We are on the right course. We are on the right course. Next we have accumulated depreciation, 112,000. Now accumulated depreciation depreciation. This is a liability. It reduces our asset level. So 112,000. It reduces the asset in the vehicle. So 112,000 has the impact of reducing the asset in the vehicle. So 112,000 on the credit side. And then this is something about accumulated depreciation. Depreciation is actually money that is set aside so that to replace the worn out or the used part of the motor vehicle. So this is money that we are just holding, but it's really not our money. It's some monies that belong to, there's a project tied to it. So we are holding on to something that is not ours. That's why it's a liability. At some point, we will have to release it. So it becomes a liability, and it's found on the credit side. Then capital 468,300. Of course, capital is money that has been injected into the business, and so it belongs to the owners of the business. It's a liability to the business, 468,000, because it belongs to the owners of the business, and the owners are looking forward for a day when they will be repaid back, when they'll recoup their capital. We all invest in business to get some money. We don't invest to lose our capital. So 468,300. 468,300, like that. 468,300. Good. So we are done, because now the rest of the additional information will not feature in our trial balance. We'll only deal with what has been given to us in the trial balance. This will only feature when we talk about the P&L account. So now, what that means is that we are ready to get the totals, and these totals, debit and credit, remember what we said? They must always balance. Debit and credit must always balance. So let's get the total and see if the two sides will agree. If they don't agree, it means there's a problem somewhere. Either it is us who are posted wrongly, or maybe we have those errors that were made. 960,000 plus 720 plus 68 plus 112,000 plus 468,300. That gives us 1547,820. 1547,820. Like that. 1547,820. So let's also add this side. We are supposed to get the same figure. 100,000 plus 720,000 plus 10,000 plus 35,000 plus 15,000 plus 8,800. We're going to combine. Then plus 450 plus 1210 plus 400 plus 24,000 plus 600 plus 12,800 plus 140 plus 250,70 plus 14,350 plus 280,000. 1547,820. So yes, thank you. This one is balanced 820, just like that. It's quite a straightforward question, and we are done with our trial balance. So this should give you 6 marks as shown in the question. Now let's go to the second part of the question. They want profit or loss for the end of that. So we'll say Weissman Electronic Shop again. Weissman Electronic Shop. Then you say income statement. For the year ended. Realize the difference. Here we are talking about for the year ended, and the trial balance we're talking about as at for the year ended at 1st March 2022, like that. Like that. So then, as usual, as it's our norm, let's have 3 columns like that. Let's have 3 columns like that. Let's have 3 columns like that. The third column like that. And then this, we will always start with the trading account, and the trading account is made up of sales. So sales less cost of sales. So our sales, we just pick from here. Our sales is 960,000. 960,000. Did you have carriage in the sales returns? No. So we just capture it at the outermost column like that, and then we say less cost of sales. And under cost of sales, we have the opening stock. I think it was 14,350 if I'm not wrong. Yeah, inventory 14,350. This is the opening inventory. In the total balance, we'll always get the opening inventory, not the closing inventory. Then plus purchases, and our purchases was 720,000. Yeah, purchases 720,000. Purchases 720,000. Did it have workings? Yes, it had workings. It had carriage inwards. I remember carriage inwards. I remember seeing carriage inwards. So carriage inwards was, I think, 10,000. Carriage inwards 10,000. Yes. So carriage inwards 10,000. Did we have return outwards so that we can reduce this figure? I didn't see return outwards. I didn't see return outwards. I didn't see return outwards. So check the additional information just to be sure. Aha, look at this. That they are included in the purchases, the purchase of equipment and office computer worth 120,000. Purchase of equipment and office computer. This is timely. We're almost forgetting this. So we are supposed, because these are assets, so they are not supposed to be part of purchases. So we are going to reduce this to deduct from the purchases. So we'll say less equipment, purchase of equipment and office computers. Less equipment and office computers. Less. There's no need to say less. We'll just put the brackets. So equipment and computers. How much? 120,000. So this one we are going to deduct. And because there is no return outwards, we carry this. This will give us 610,000 if I'm not wrong. 600 and this 730 minus 120 is 730 minus 120 is 610. So like that. So then with less what? The closing stock. And the closing stock, so we'll just assume, let's add this 0. Though it was like that in the question. So let's take 16 to 50. 16 to 50. At least that way it makes sense because it's closer to the opening stock. So with less, let's get the figure. 14,350 plus 16,000 plus, minus 16,250. That gives us 608,100. 608,100. So that is the cost of sales. So minus 960,000. We have 351,900. And this becomes our gross profit. Our gross profit. Gross profit is that 351,900. So then the next thing is to add any incomes and gains. Did you have any incomes and gains? Carriage inwards, drawings, rent rates, insurance. I didn't see any income. There is no any income. There is no any gain. Additional information, just check to be sure. Inventory purchases, these are depreciation, allowance for doubtful debts is to be increased. If it was to be decreased, then it will be a gain, but it is increasing. So, of course, now we don't have any. So we go straight to the expenses and losses. Now there are quite a number of expenses and losses, so let's pick them. Land sales, purchases, carriage inwards, drawings. Drawings is not it will feature in the balance sheet. So rent expenses 15,000. So we start from there. Rent expenses 15,000. I think there was something about this rent expenses, rent and rates. There was additional information. So you can see rent 300. But remember here we are not the zeros have not been restricted, so we'll only pick 300. So rent was rent is 15,000. So 15,000 plus 300. So you simply say rent 15,000. Now notice I'm putting this in the innermost column, and then we have accrued rent. How much? 300. So when we add this, we get 15,300 here. And then we go to the next item. The next item is rates. Rates is 8,000, and rates, there was also some workings. So to be on the safer side, let's put it here, 8,000. And then let's get the workings for rates. Rates is 200. So 200, and these are outstanding. Outstanding, it means it's part of that year's expenses, but it had not been paid. So 200, so that gives us 8,200. Let's go to the next one. So sorry, this is rates, 8,000, and then accrued rent. Accrued rent. It's part of that financial year's expense, so we add it back. So then we have insurance at 800. Insurance 800. There was something about insurance also. The following expenses were prepaid, so 180. So insurance is 800, but 180 was prepaid. So we say insurance 800, but 180 was prepaid. Prepaid insurance 180. So how do we treat prepaid? Prepayment means we had part of this 800 was for the next financial period. So we are only interested with what belongs to this financial period. We are not interested with what belongs in the next financial period. But 180 is for the next financial period because it's prepaid. It has been paid in advance. So we less it so that we can get the real amount for the real figure for this financial year. So this will give us 620, like that. Then we go to the next one. So prepayment simply less from there. Postage and Internet 450. Do you have anything on Postage and Internet? I doubt. Yeah, we don't have anything. Postage and Internet. So we pick it as it is. Postage and Internet 450. Postage and Internet 450. Now realize because this doesn't have workings, I'm pushing it straight to the outermost column. Then stationery 1210, there was some working on stationery. Stationery 1210 plus 190 because this is outstanding. Stationery 1210 plus 190. So again here we'll come back and do our stationery 1210. Outstanding stationery. We have not paid, but we are supposed to have paid 190. So this gives us 1,400, like that. Then we continue with our journey. We are moving on well. Sales promotion expenses 400. There is something about sales promotion. 80 is prepaid. So sales promotion expense is 400, but 80 is prepaid. So simply come here and say sales promotion expense 400 because it has workings, and then prepaid sales promotion expense is 80. So this gives us 320, like that. Then we go to the next one, sales promotion 400, and then prepaid is 8. I'm just confirming the figures. So let's go to the next one. Salaries and wages 24,000. Are there any workings for salaries and wages? Any workings? No workings. So salary and wages, will pick it as it is. Salaries and wages 24,000. So salaries and wages 24,000. Salaries and wages 24,000. Next. Salaries and wages 24,000. Where are we? Gone up. Bad debts written off, it's a loss, so 600, we pick it as it is. When working on it. Bad debts written off 600. Bad debts written off 600. So since it doesn't have any workings, just put it as it is. Allowance for doubtful debts. Remember it was increased to 800. Yeah, it's here. Allowance for doubtful debts is to be increased to 800. So we had already charged 720. So we are only interested with the increase. So it will be 800 minus 720, which is only 80. Forget about the zeros. The zeros are restricted. So 800 minus 720 is 80. So we'll only take the increase. Don't take the entire figure because the 720 had already been charged. So increase in bad and doubtful debts. How much is the figure? 80. You can just show 800 minus 720. The figure is 80. Then next, accounts receivable, that's not an expense. No. All these are now not found in the P&L except depreciation. So let's go back to the question and see. We've already worked out all the prepayment. We've captured the outstandings. We've captured these purchases. We've captured inventory. We've captured. So it's only this that we've not captured. What is that? Depreciation. And what are they saying? They are saying that equipment and office depreciates at 10%, motor vehicle at 15%. They depreciate on cost. So equipment and office, we are interested in depreciation. So we'll come here and say depreciation, equipment and computer, 10% of, remember the figure was 120,000 that was included, unless if we have any other equipment and computer. Equipment and office computer, 10% of the cost. Do we have equipment and computer? I'm going to check equipment and computer. We don't have. So it's 10% of the 120,000. This one that was included erroneously in the purchases account. So it's 10% of 120,000, which is 12,000. So we'll simply come here and say 10% of 120,000, 10% of 120,000, which is 12,000, like that. And then now we have motor vehicle. Motor vehicle, they have said it's depreciating at 15%. So 15% of, let's go to motor vehicle. Remember, they're talking of cost, not written down value. The moment they talk of cost, pick this one. So it's 15% of 280,000. 15% of 280,000. 15% of 280,000, like that. So 15% of 280,000 is 0.15 times 280,000. That gives us 42,000. 42,000. Good. I doubt if there's any other thing remaining. So check. I think we've captured, everything under the additional information, and of course even in the, unless otherwise. So let's just get the total and see how it goes. This is 15,300 plus 8,200 plus 620 plus 450 plus 1,400 plus 320 plus 24,000 plus 600 plus 80 plus 12,000 plus 42,000. That gives us 104,970. 104,970. So this 104,970 will come in the outermost column. Since it's an expense, we less from the gross profit. Remember, there's a figure here. So minus 351,900. That was the gross profit. We get 246,930. 246,930. 246,930. 246,930. And this is our 246,930. That becomes our net profit. Now, I think we've answered the question. The question wanted us to find out, to come up with the statement of profit or loss for the year ended at 1st March and rewrite the trial balance. So we are done. But maybe just for the sake of it, for the sake of just confirming our answer, maybe we can rush through the balance sheet and see if it balances, just for our own sake. So for the balance sheet, we'll again do the wise man. Now, this is our own question we are setting for ourselves, electronics. In an exam, no need to do this because they mark transaction. So financial statement of financial position, statement of financial position as at 31st March 2022. Just for the sake of it, just to see if we are correct. But again, it's dangerous because maybe the examiner was not keen on the balance sheet. So maybe it may not even balance. But let's just try. After all, we are just doing some revision. So we'll start with the non-current assets, and of course we'll have the motor vehicle. And the motor vehicle value was 120,000. Then it didn't have any depreciation except for that year, which was 12,000. So that makes it 108,000. Then you have the, sorry, this is the motor vehicle. Motor vehicle be here. So here we had the equipment and computer. Equipment and computer. So for the motor vehicle, let's get the figure. I can't remember that figure. So for the motor vehicle, the figure was at cost to 80,000. Then remember, this is accumulated plus depreciation for this year. I think the depreciation for this year was 42,000. 42,000. Just check to confirm. Yeah, 42,000. So 112 plus 42. This will be the depreciation for this year. 112 plus 42. That will give us 154,000. 154,000 if I'm not wrong. So the figures that we are taking are 280 minus 154. 280 minus 154. 280,000 minus 154,000. This will give us 280 minus 154. We have 136,000 or 126,000. Somewhere there. 126,000. I think it will give us 126,000. 126,000. So you can just check to confirm. Yeah, if you add 154 plus 126, you get to 80. So we are good to go. Our interest is here. So this is 234,000. Good. Then we go to current assets. And under current assets, we have inventory. We are now just doing this to confirm our figures. And go straight to closing inventory. The closing inventory was 16 to 50. So pick it as it is, 16 to 50. 16 to 50. Then we had accounts receivable. Yeah, we had accounts receivable. Accounts receivable, which was the figure for accounts receivable was accounts receivable 12,800. But remember, there was an 800. This 800 here. Allowance for doubtful debts is to be increased to 800. So we factor this. So it will be 12,800, which is the accounts receivable, minus 800. That will give us 12,000. So accounts receivable will be 12,800. And then we say provision for doubtful debts, which is 800. So this will give us 12,000, like that. Like that, just creating space, 16 to 50, 16 to 150. So 16 to 50, and then we have captured the accounts receivable. We've already captured the accounts receivable, it's there. So let's pick any other asset that we can see around. Accounts receivable, we have picked it. Cash in hand and cash at bank. So cash in hand 140, cash at bank 25,070. Cash in hand for 140, cash at hand 25,070. So let's pick those two. Cash in hand 140, cash at hand, cash at bank 25,070. Then we pick any other. We have prepayments here. Prepayments are assets, current assets, so 80 and 180. Prepayments, so we have prepayments which you have to factor. Remember those prepayments that we deducted in the P&L. So sales promotion was 80, and then insurance is 180. Insurance is 180. So that will give us 260. So 260. Next, if we have any, but I doubt if we have any. I think we are done. We don't have any other left. So let's get the total here. Let's get the total. This will be 16 to 50 plus 12,000 plus 140 plus 250, 70 plus 260. That gives us 53,720. Yeah. Then we go to current liabilities, and under current liabilities we have accounts payable. Accounts payable. The accounts payable figure is let's go back up. Accounts payable is 6,800. So 6,800. 6,800. And of course we have the outstandings. Outstanding figures, they are in the additional information. So let's pick all the outstandings. We have stationery, rent and rates, 190, 300 and 200. 190, 300 and 200. 190, 300 and 200. So we pick them as they are. Stationery, rent and rates, 190, 300 and 200. This gives us 500, 690. So we have that 690. I doubt if we have any left. So this one is been corrupted. So let's just undo that. Sorry, this is equipment and computer. So we'll leave it at that. So let's redo this. It has been corrupted. So 800, let's remove this, was not part of this, and 690 was also not part of that. And this was also not here. Okay, so let's redo that. Accounts payable was accounts payable 6,800. 6,800. And then outstandings, we had rent, rates, and stationery. Rent, rates, and stationery, and the figures were 300, 200, and 190. This gave us 690. So let's check if we have any other current liability. Yeah, I think we've captured them, right? So any other current liability, check. Yeah, there is no any other current liability. So, oh, these figures are again here with me. They don't want to settle down. Okay, so let's get the total. 68 plus 690, that gives us 7490. So 7490, and because they are current liabilities, we are going to deduct from the assets. So we have 234,000 plus 53,720 minus 7490. That gives us 280, 230. 280, 230. 280, 230. So 280, 230. Good. Then let's look at the financed by section. Financed by section. So financed by, of course, I've seen we have capital. Capital is how much? How much is capital? Capital is 468,300. So capital 468,300. 468,300. Then we get the net profit. Add the net profit. So we got a profit which was 246,930. 246,930. And then we less the drawings. We less drawings, which, if I'm not wrong, the figure was 35,000. Let's just get it from here. Drawings 35,000. Yeah. So 35,000. Like that. So then let's add the three figures there that we have: 468,300 plus 246,930 minus 35,000. 35,000. That gives us 680 to 30. 680 to 30. And wow, our figures are not balancing. The difference is very clear. The difference is 680 to 30. The difference is 400,000. I think we must have left something out. So let's just check. 400,000. There was a 400,000 somewhere. Yeah, land 400,000. So that makes it complete. So it means we simply come back here and we add land. Under non-current asset, we also had land valued at 400,000 that we had left out. So 400,000, and this will make this figure 634. 634, which will now, when you add this, you will get 680. So then we are done. That is it. This last part was not has not actually been asked, but we are just doing for our own convenience, just to prove if everything is correct. So this is our net capital employed, and the net capital employed is simply non-current assets plus current assets minus current liabilities, or non-current assets plus working capital, and working capital is current assets minus current liabilities. So net capital employed is 680 to 30, and it's also the same figure here, net capital employed, which is 680 to 30. So we are done with the question, and we've also done an extra bit of it which you have not been asked. So this should give you 20 marks, and you should ideally do the question in because it was not that complex, around 20-25 minutes should be able to get you through this question. So thank you. Let's meet in our other questions.